Hey, what's up, homies? Welcome back to another episode of Price Targets with your host, Bitcoin Jack. Welcome back, guys. It's Thursday, and as promised, a little update. I don't think there's a lot to talk about. I spoke about a lot of things in my last live stream, and here, in between then and now, not much has happened. We're gonna, just dive in, go over a couple of charts. Maybe, I can share some smaller time frame IDs. Generally, personally, don't trade them a lot, but we can talk about it. But first, please, guys, attention for Prime XBT, the sponsor of these videos. If you sign up with them using the ref link in the description / the watermark below and use the promo code BitcoinJack, you're going to get a deposit bonus, which is pretty nice. That you can trade with on the platform. Personally, I've been trading with them on it for a scalp account for the last couple of months now, where I kind of take a little bit of the degen moves on larger liquidation cascades. It's been mostly on the long side, completely counter to my bigger time frame trading, and it's been good, especially now. The funding rates have been quite negative, capturing those outsized wicks to the downside and then ride some short phased momentum to the upside has been a lot of fun. So thank you, Prime, for sponsoring. Really appreciate it. And if you guys appreciate these videos, consider just checking them out. It helps me, it helps them. So thanks for that. So Bitcoin, there's not really much to say here when we look at the higher time frames. This was, worst case downside. It's bounced. It actually bounced quite a lot when you actually start measuring the percentages. And on the daily, you can see, we got the 20K level here. The 19.6, 19.8K level, which was the previous all-time high. It's finding support on it for now. If we dive to the lower time frames, one can argue that, whoa, I'm breaking my chair here. Anyway, one can argue that this is starting to pivot up a little bit. It had bounced, it's kind of resetting, and now it's going to aim to go for these two highs here. I personally don't really have an entry setup idea here because I kind of feel that if this comes back down here, it's going to accelerate to the low here, the retest here that pushed this into here. What I did mention on the last live stream was, there's a lot of people looking for an exit that originate from these, for example, lending platforms that are in trouble. So I don't really know how bad it is. It's quite opaque structures. What I do know is that if we cannot formulate a bounce, and price actually comes back down here, has another bounce, and then comes back down here again, I do think that spells trouble for the month of July. All right, so expiration tomorrow. I think the options expiration is pinning price around 20K level. There's a large put strike at 20K, and I don't think the dealers really want to pay out on that. So I think they're going to try and keep it above 20 at least until that expiration. And then the upside, if a bounce actually can, mature, is this old zone. It hasn't been retested. Normally you would expect it to be retested. Right now, I would, I'd be okay with a long into the level. Not an all-in, positioning long-term, whatever kind of reasoning there. But, as a play, that would be really nice. In my opinion, the safest play from here would be price to dip below here, get those wicks, and then, recover. and then trade into these highs here. If it then, comes back down here, retests it, and then coils up, I think there's an opportunity to long that as well into the level here. I'm not going to be taking too much risk here, not at all, because I think that there is, there's pain to the downside if things start to cascade. I do think that fear is holding people back from actually longing it, which opens up the case for a squeeze. And that squeeze, I don't really know how much, resistance is going to be found on that kind of squeeze. So I don't know. I was looking at this kind of chart. It wouldn't surprise me for, just stupid sideways, silly action, and then as option expire tomorrow, just to see some bars to all kinds of sides. So in my opinion, you're trading in the middle of a range here, and if you really like to trade the low time frame stuff here, I'm gonna hold off on positioning until those options expire tomorrow. If you want to trade from the middle of the range into either the high of the range up here or the low of the range down here. Could this become a falling triangle? It could. Descending triangle. Could it, just become a sideways structure? It could. Could it eventually start to coil up and break out some kind of inverse head and shoulders? Yes. So there's a lot of indecision here. I'm gonna let those options expire, and you do you. That's up to you. But then for ETH, BTC, the same story still applies. Generally, when let me just remove this. I've been saying this and I've been repeating it, but we're kind of dangling below the old range, and it's not really accelerating to the downside. Generally, this is kind of like a fake out structure. Especially if it directly hugs the level. So I'm in no way gonna short the ETH BTC pair, or have any illusions that this has to come down. In fact, statistically, it's actually more likely that this is going to come up into at least a monthly here or possibly higher. I wanted to dive into Solana because they have that phone. And they announced that phone, so I was like, okay, well, that's kind of a sell the news event, and I'm not all that hyped about a freaking crypto phone. We've seen many such cases where they try to develop such a phone, and I think it's too early. I don't think there's a product market fit for it. I think it's in general, even outside of crypto, it's a pretty challenging thing to accomplish to actually get yourself in the phone market. And if they're doing it to kind of front run the rest of the space with that crypto phone, well, that may be actually a smart idea, but then you're kind of banking on I don't know. I think it's a tricky endeavor, and especially if it's tied to Solana. In my opinion, Solana is, they have issues to solve. They innovated a lot of things, but I think consensus-wise, there is also, problems with Solana going forward. I might start posting more on that in the future on Twitter because I've been researching it more and more. Personally, I do think that it's just, this kind of feel like a seller news event. So we have this range here on Solana. Makes sense that we get rejected at a range high. It's clean. Maybe we can kind of, squeeze a little bit above this high here and then lose it. Or maybe this was just it, on the news, and then come back down to the range lows, potentially all the way down here, which is quite a dramatic stretch, right? So the first level of support when we just trade, when we try to use trade range terminology or whatever you want to call it. The way, you know, I'm not the greatest range trader, but the way I try to approach it is just try to get in on around the edges and find confirmation of the breakdown or the breakup of things, and then at least, you know, trade it to the middle of the thing, which in this case, you know, you can see it's quite nicely sitting on this breakdown level of this structure here. So if we could draw another level here in the middle, which is come on, yeah, which is then target 1, and then below that I do think it's going to go to the range low around here, and that's, you know, it's quite a big range, close to 25%. So yeah, I would monitor the low time frames on this one here, see if we can find anything. It's probably, you know, retesting this. May actually go below this and then come back down for a retest and then come down. That's scenario A. But, you know, the other thing I could see happen and would, you know, give a cleaner signal is actually raiding these highs and then closing back below it. Right. There was one more chart I wanted to look at. Oh yeah, the other thing that we should, you know, that we should talk about, maybe not this video, maybe one of the next videos, is, you know, we're seeing some kind of, I don't know if it's demand destruction or just simply technicals playing out on commodities. We can see, well, gold is slightly down. It's nothing major. You know, the trade ID that we've been following on gold is still valid in my opinion. We're waiting for this to start coming down into the high 1600 area. But we're also seeing, for example, copper starting to break down. So there's a commodity shift going. Oil is, you know, down again, where I thought maybe, you know, this was the point where it was going to start to go higher. I still do think that oil is set up for, you know, 140 to 160 later this year. But it's down, you know, significantly from its recent highs, almost 20%. And same is going on with natural gas. Holy freaking moly. It's coming down, it's retesting its old highs. We do have to note though that the opposite is happening in Europe. So basically it's because of that, and we talked about that a couple of weeks ago. One of those LNG facilities broke down, and they no longer can export their natural gas to Europe. They're going to fix it, but that kind of quote unquote means that, you know, Europe is not receiving anything from the US side right now, or less, and that natural gas, you know, still has to be sold to the market. And if there is, you know, if they cannot store it too much, or if storage is kind of, you know, getting fuller, and there's demand in the market, they probably just sell it into the market. So this is probably why natural gas in the US is down. So I'm expecting that, you know, expecting that to go up later this year again, and hopefully this is going to get down a little bit, because I don't, you know, it's crazy when you think about how much natural gas, these are the Dutch futures, went up. You know, it's ludicrous. It was better just to buy natural gas and store it than to buy Bitcoin, basically. I'm really sorry for my voice. It's still the pollen, guys. So yeah, you know, there's other demand destruction, or, you know, maybe it's not just demand destruction, but also quote unquote, you know, some supply chains getting a little bit better, not influenced by the whole Russia-Ukraine thing. So wood is down significantly. I do sense that this will have another bounce, and that there's going to be some issues occurring on this before, you know, we're going to settle for more normal prices next year on these kind of things. But this is kind of promising into next year for inflation to, you know, slightly come down a little bit. On the front of expected future rates, we can see here that they're coming down a little bit. So this is end of the year, 3.375%. So still on track, but what you can see is that beyond, so this is January 2023. This is March. Is this March? March or April 2023, you see it at 3.5%, and after that is actually starting to come down. So the expectations here are that we're gonna see terminal rate or peak high grade or whatever you want to call it. I don't know what the right terminology is, but it's expected to happen right now. Market expects it to happen in February, March, kind of, and most of the most significant hiking to be done by the end of the year, actually, already by October. So this is October, and after that, we may actually see one more hike. This is November, and this is December. So you can see how it slows down. This is actually July now, so 1.68, which is the current, what we're hiking towards to after the latest hike. One more chart, I guess, which I always, I think it's such a fascinating chart, and it makes me wonder. This is the euro-dollar future rate. Current contract is the September contract, so this is the what they're hedging for in September, which is 3.3% right now. And basically, what we've seen in the past is it's not always worked out that way, but the high in 2000 and the high in 2008, essentially when you saw the forward contract on these futures to come down, you see right here, this is here, started to come down, this is here, started to come down, same story here, the high here, the high here. You saw then the entire market started to come down as future rates started to come down as well. Funny thing is, the market already started to come down here, and this hasn't happened. So this this is maybe some complicating factors by the fact that Europe is also just being shitty and whatnot. But I'm going to watch out for this chart to start actually slowing down or, coming down. And it could very well not. It could let me put it differently. It's going to be an important moment one way or another. Let me close the door. It's going to be an important moment one way or another. And we've seen in the past that generally, the declines in the rate, they have spiked either melt ups or meltdowns, but the pivot here and here and here, and obviously here as well, because we had this crazy volatility going on as this started to come down. We can, safely assume that whatever the market is kind of positioned for back then in the direction that we're going in by then is going to be the direction until this kind of, starts to fizzle out, as you can see here. This starts to slow down, fizzle out, market bottoms, same kind of stuff here, starts to slow down, market bottoms, right? Starts to fizzle out, market bottoms. So kind of the thing that we need to, just one angle that we can pay attention to going forward on the macro. I think that was it. That's almost 20 minutes. I hope you enjoyed this. Guys, if you like these videos, subscribe, like, whatever, and make sure you check out Prime XBT through the link in the description below and use the promo code BitcoinJack because, it helps them, it helps me, and, I think that's all fair game. Take cares, and, we're going to have one more live stream. I think I'm going to do it on Sunday. I could do it on Monday as well, but I'm going to be traveling next week. Not really sure when I leave, but it's probably going to be the, end of the month. I will keep doing these videos when I'm away because I can, I can take some portable stuff with me. this specific video is not requiring all that much computing power to actually record and stuff. The other one might actually be more complicated, and I don't want to bring my desktop because I want to travel light. So it's gonna, these videos are gonna continue 2 times a week when I'm gone. The live stream is gonna come back in August. So I'm sorry, but that's just the way it is. And for me, it's also time to, I don't know, I've been working my ass off, I feel like. Markets have been super volatile, so I've been around a lot trying to make sense of whatever's going on. And it's honestly to God, I don't know whether markets are going to calm down, but it's time for me to actually, take a little step back, watch what's going on, still trade the higher time frame, but not be around for, whatever is happening on the nitty gritty of the market, and, get some chill time, me time. So yeah. All right. I'll see you guys on, Sunday or Monday. Depends on what you guys prefer. It doesn't really matter for me. All right. Take care. Peace.